Welcome back to our podcast, everyone. Today we have a very exciting episode lined up for you as we delve into three pivotal topics that are shaping the global economic landscape right now. We're going to discuss the evolving dynamics of the US-China trade relationship, the implications of SoftBank's recent stake sale in Nvidia, and the potential challenges facing AI-driven stocks in the investment market. Joining me today is our expert guest who brings a wealth of knowledge in finance and technology. Welcome.
Thank you for having me. I'm excited to discuss these critical issues that are influencing not just the US and China, but the global economy as a whole.
Absolutely. Let's kick things off with the US-China trade relationship. It's been a roller coaster over the past few years, hasn't it?
Definitely. The trade relationship between the US and China has been fraught with tension, especially after the trade war initiated in 2018. Tariffs were implemented, and both countries have been in a tit-for-tat situation that has affected global supply chains and markets.
Right. And now, with the recent shifts in leadership and policies, there seems to be a new approach. What do you think are the current dynamics at play?
Well, we've seen a slight thaw in relations with both sides expressing a willingness to engage in dialogue. However, underlying issues remain, particularly around technology and intellectual property. The U.S. is concerned about China's ambitions in tech, while China is pushing back against what they see as unfair restrictions.
That's a great point. The tech sector is a huge battleground. For instance, take the semiconductor industry. The U.S. has placed restrictions on exports to China, which has significant implications for companies like Huawei and ZTE. How do you see this affecting the broader global economy?
It's substantial. The semiconductor industry is the backbone of modern technology, and any disruption can ripple through various sectors, not just in the US and China, but globally. For example, if Chinese companies can't access advanced chips, it could slow down innovation and production across industries, from smartphones to automotive tech.
And we've seen how critical supply chains have become, especially during the pandemic. Companies are now reevaluating their dependencies on Chinese manufacturing. Do you think this will lead to a more diversified supply chain strategy?
Absolutely. Many companies are looking to diversify their supply chains, not just to avoid over-reliance on China, but also to mitigate risks from geopolitical tensions. Countries like Vietnam, India, and Mexico are becoming attractive alternatives. However, this transition takes time and requires significant investment.
It seems like a double-edged sword, where companies are trying to balance costs with the security of their supply chains. Speaking of costs, how do you think these trade tensions and supply chain issues are affecting consumer prices?
That's a critical question. Higher tariffs lead to increased costs for companies, which often get passed down to consumers. We've already seen inflationary pressures in various sectors, from electronics to consumer goods. If this trade conflict continues, we could see further price hikes, impacting consumer spending.
So, it's not just an economic issue, it's a social one too. People feel the impact of these decisions directly. Moving on to our second topic, let's talk about SoftBank's recent stake sale in Nvidia. This was quite the headline grabber, wasn't it?
It certainly was. SoftBank sold over $10 billion worth of Nvidia shares, which raised eyebrows across the investment world. Nvidia has been a standout performer in the AI sector, and this move has sparked discussions about SoftBank's strategy and the future of AI investments.
It's interesting, isn't it? Nvidia has benefited immensely from the AI boom, with its chips being crucial for AI applications. Why do you think SoftBank decided to sell such a large stake now?
There are a couple of factors at play here. First, SoftBank has been facing pressure to generate cash, especially after some of its other investments haven't performed as expected. Selling Nvidia shares allowed them to capitalize on the soaring stock price. However, it also raises questions about their long-term belief in AI's growth trajectory.
Exactly. It seems a bit contradictory. If AI is seen as the future, why would they pull back? Do you think this indicates a broader sentiment among investors?
It could signal caution among investors regarding the sustainability of AI stock valuations. While AI is undoubtedly transformative, there's also a risk of overvaluation and a potential market correction. Investors are weighing the long-term prospects against current valuations, and SoftBank's sale could be a reflection of that cautious outlook.
That makes sense. It's essential to look at valuations critically, especially in a sector like tech that can be so volatile. Speaking of volatility, what do you see as the future challenges for AI-driven stocks?
One of the biggest challenges will be regulatory scrutiny. As AI technologies become more pervasive, governments will likely step in to regulate how these technologies are developed and used. This could impact companies like Nvidia and others who are heavily invested in AI.
That's a crucial point. Regulatory environments can change rapidly, and companies need to be agile to adapt. There's also the debate around ethical AI. How might that impact investor sentiment?
Ethical considerations are becoming increasingly important. Companies that do not address issues like bias, privacy, and accountability may face backlash from consumers and investors alike. This could lead to reputational damage and impact stock performance. Investors are starting to look at ESG, environmental, social, and governance factors more closely when making investment decisions.
It seems like a multifaceted issue that goes beyond just financial metrics. As we wrap up this segment, what advice would you give to investors looking at AI stocks right now?
I'd advise them to do thorough research. Look beyond the headlines and hype. Evaluate the fundamentals of the companies, their competitive positioning, and how they're addressing potential regulatory and ethical challenges. It might be a good time to diversify within the tech sector to mitigate risks.
Wise insights, as always. Now, as we transition to our final topic, let's dive deeper into the interconnectedness of global finance and technology. With everything we've discussed, it's clear that the lines are blurring between these sectors. How do you see this trend evolving?
The convergence of finance and technology is transforming how we think about investments, risk, and growth. Financial technology, or fintech, is making investing more accessible, while traditional finance is increasingly leveraging AI for analytics and decision-making. This trend will only continue to grow, creating new opportunities and challenges.
It's fascinating to think about how technology can democratize investment opportunities, but with that comes risks, especially with cybersecurity threats. How should investors be thinking about risk management in this new landscape?
Risk management should be a top priority. Investors need to consider not just market risks, but also operational risks, especially as companies adopt more tech-driven approaches. This includes ensuring that cybersecurity measures are in place, as breaches can have devastating impacts on company reputations and stock prices.
Well said. It really emphasizes the need for due diligence in today's investment climate. As we look towards the future, what are some key indicators you'll be watching to assess the health of the global economy, particularly with regard to these themes?
I'll be keeping an eye on trade policies, tech regulation developments, and AI adoption rates across industries. Additionally, monitoring consumer sentiment and spending patterns post-pandemic will be crucial. These factors will give us a clearer picture of how the global economy is navigating these challenges.
Great advice. It's clear that the interplay between trade, technology, and finance will continue to be dynamic and complex. Thank you so much for sharing your insights today.
Thank you for having me. It's been a pleasure discussing these critical issues with you.
And thank you to our listeners for tuning in. We hope you found today's discussion valuable and insightful. Don't forget to subscribe for more engaging conversations on the latest trends in finance and technology. Until next time, take care.